prepared, you know? Yeah, it shows you're well prepared somehow. If you just chill, you should. Well, a very good morning to you. What a wonderful Friday. And you know, Fridays are easy days for majority of us. And today, we want to have a conversation touching on home ownership. I know this is a hard conversation in the country, but at the same time, today we want to simplify it. When people talk about affordable housing, you getting to own a home, sometimes it's complicated behind terms, mortgages, rates, and all that. We strip all that and we bring the raw information to you. How do you get to own a home? Now, from a macro perspective, the big picture, what we've been seeing from the government, the aim is to build 200,000 affordable housing units every year. And the president said that actually on the county level, they're aiming to do 5,000 houses per county. That is every year. Now, the affordable housing agenda is something that's not new. We've seen this with actually the previous regime also promised to build 500,000 houses. Now, Kenyans were asking, how many have you built? Then the government says it's not in absolute figures. It's not like we're building ourselves, but we are collaborating so that we, push 500,000 houses into the market. Apart from that, matters to do with home ownership. It's becoming more expensive to own a home by the day. Actually, the average house, according to some research done by one of the firms in the country, is that, it costs 1.1 million bob at a minimum for you to be able to own a home in this country. Now, how many people have that kind of income? That's why we have financials coming in to help you, support you, get a home and pay over a period of time. That will feature majorly in our conversation today. But without wasting much time, welcome. The focus is making home ownership possible. My name is Noah Kipkemboy, and I have a strong panel. We have every key industry player on our panel this morning. I think it's very critical because we have one of the figures actually that is connecting of all of us, Kenya Mortgage Refinance Corporation, which is very, very important, but at the same time, respective banks. And I know we are clients of different banks. They have different approaches. We'll be looking at that. How exactly can you get help and own affordable houses in these spaces? So at this particular moment, I'd like to introduce my panelists. They look very gorgeous for Friday. We were talking earlier on about dressing down. It's a Friday. People are in suits here, but I hope we'll be able to, communicate, our points, and Kenyans will be able to gain. So on my immediate left is Nelly Waithaka, who is the head of banking client solutions at Stanbic Bank Kenya. Welcome to the show. We also have next to her Joseph Kamau, head of property development and investment at HF Bank. Welcome to this discussion. Next to Joseph, we have Beatrice Chege, who is the product development manager, retail mortgage at KCB. Thank you very much for joining us this morning. Next to Beatrice, we have Geoffrey Mora, who's the head of credit at KMRC. Sometimes that sounds like a mouthful, yeah? We just say Kenya Mortgage Refinance Corporation. And lastly, at the far end, the gentleman in a three-piece, which is very important. We're discussing, should we loosen the tie? It's a Friday, but we say maintain that. John Kaburu is the regional manager and head of mortgage, retail, and business banking at ABSA Kenya. Gentlemen and ladies, welcome to this discussion. Now, without wasting much time, I think we need to lay sort of foundations, yeah, to understand where the current housing market is. But even before we do that, I'd like us, first of all, to ask, that is Geoffrey. Geoffrey, I know you come from Kenya Mortgage Refinance Corporation. KMRC actually has been featuring in a lot of our discussions when it comes to housing and making affordable housing. You're doing something incredible in this market. For starters, just tell us what your role is for a mwananchi to understand what is the role of KMRC. Starting with you, sir.
Thank you, Noah. Kenya Mortgage Refinance Company is a company that was formed by the public, that is a government coming together with the private institutions. These are banks and SACCOs and development finance institutions, so that they can create this organization that will enable more Kenyans be able to get affordable loans. So we are talking about affordable loans. Because when you look at the landscape today in the market, and especially looking at the macroeconomic situation we are in today, interest rates are going up. And that means that majority of Kenyans actually will not be able to afford a home loan.
Yes.
So the company was therefore formed to bring affordability in this market by accessing or getting funding from institutions like World Bank, African Development Bank. These are concessional loans. These are loans that are given to the government, and the government then is able to give this body called Kenya Mortgage Refinance Company so that it can on-lend to the banks and SACCOs. So we are providing liquidity so that the banks that are seated here are able to lend to their customers affordably. And here we are talking about below 10%.
Okay.
And these are loans that are home loans that are given fixed rate for a long term. Because today when you look at, if you are to go and take a unsecured loan for 5 years,
yes,
which is priced at 15 or 16%, that is a very expensive loan. It is expensive in two factors. One, the tenor. It is very short term. Secondly, the interest rate is very high. So when you combine those two factors, then it becomes unaffordable to the common mwananchi.
Yes.
When you spread that loan for 25 years, then you bring more customers to afford. Because when you spread it for longer, then the repayment becomes very small, and then many people can afford that. Okay. So those are the two things we are actually addressing in this market. Okay. And so far we've done quite a lot in that. And we'll be talking more about how the product comes out.
Incredible. In fact, right now we've been seeing sort of the implementation of risk-based, lending rates, yeah? And rates are really changing, yeah? And if you're riskier, there's a likelihood that your rates are going higher. And when you're talking about affordability and the target market, that is a riskier market. So we need people and companies like yours to provide that financing so that to help majority of Kenyans who are not able to, pay that high rate. Very, very important. But for starters, since you're talking about home ownership and you've already laid a very good foundation, that loans are very expensive. I'm trying to get a loan either to build a home or to buy a home. Yeah, you buy for me, I'm supposed to pay over 16 years. It's very expensive. Nelly, they are quite a challenge. Looking at the numbers, yeah, home ownership in the country, as much as overall, they say 61% of Kenyans own homes, yeah? But in terms of affording a house right now, especially for a young person like me, I'm trying to get a family, and settle down and stop paying rent. I mean, what are the challenges of owning a home in this country?
Thank you, Noah, for having us, and thank you, KMRC, for organizing this. I completely agree with you. Owning a home is an achievement that each of us has as a target to achieve within their lifetime. A number of challenges face us. Part of the challenges that face us, and it's what we are here to address, is demystifying the whole home ownership journey. We do have lots of Kenyans who, for starters, do not understand the end-to-end journey of owning a home. There are people who are of the view that it's just too expensive. They've got no idea where to start. They've not done comparisons of how much am I paying as monthly rent versus how much would I be paying for the home. There are challenges of, do I even qualify? Will a bank even listen to me? So there's the whole piece that we as lenders have to come up with, which is demystifying the entire journey. The second challenge that you have mentioned is around the supply. So rightfully so. At a global level, over 60% of people own their homes. But when you look at the urban areas, and urban in this space, I'm talking of Nairobi, Mombasa, Kisumu, the ratio of people who own home versus rent, owners are just at 20%, with the people who actually are renting are at about 80%. Rightfully said, as you've mentioned on the statistics, we've got a demand of about 250,000 units annually. The supply for this is just 50,000. When you take it a step further, only 2% of those 50,000 units supplied annually are actually touching on low income. So we do have an issue with the supply. The third issue that we are facing is also around the cost of construction and the cost of land ownership. To put up a home, the cost of owning the land only will cater for about 25 to 40% of that. Getting access to a serviced property is also a challenge, especially within the urban areas. Where developers step in and actually service these properties, what we are seeing is that they are transferring that cost back to the buyers. So the cost of this is also very expensive. You've also mentioned about rising interest rates, the fact that you are now moving into a risk-based pricing regime. It's also a huge challenge for individuals. And that is where, when we have partnerships like KMRC coming in place, where they are guaranteeing someone and saying, take a loan through this partnership, we will walk the journey with you, and we are assuring you for 25 years, the monthly installment you're paying will never change, regardless of what happens in the economy. So that is a huge plus.
Yes.
We also have solutions like tenant purchase agreements, where you get into an arrangement with a developer, pay a certain deposit, it's mainly about 20%, you take possession of the home, then the rental income that you're supposed to be paying is actually going towards home ownership.
Okay.
Yeah.
Sort of rent to own, yeah, as sort of arrangement, which is quite interesting. And I'm glad you've mentioned some of those elements and journeys that we can take towards owning a home. That brings me to John. John, I know there are quite a number of options that we can approach when somebody wants to own a home. Yeah, you can take different routes. Now, the traditional one has been, as a young man, I'm in my 20s. I need to stack up my money. Okay, hopefully I've gotten a piece of land somewhere, so it's just stacking up and building. Some of us, you have to stack up, buy a land, then after that, start building. But that should not be the case for everyone. What are the inroads towards this journey of owning a home?
Thank you, Noah, and KMRC for setting this session up. You're right that most of us would naturally drift to that space of, I buy a plot, and most likely you go to the bank and borrow unsecured or to a SACCO. You buy a plot, you repay that loan over some time, then you go back, do a top-up, and that has been the main path of most people owning their homes. And that talks to that number of 61% owning their homes. Yet, when you look at the mortgage accounts that we have in the country, when you exclude bankers, they are less than 30,000 so far, which means that actually people are owning homes. They're trying to own homes through other means than mortgages. So the other options then that come in towards owning a home, and I will end with the mortgages, but there is also a rising development that is coming through tenant purchase arrangements that have been set up, where you buy or you take a unit and you pay over time the rent, and it becomes your house, and this would mostly be by developers. But that common path has been done by the government through National Housing Corporation. But now with KMRC coming in, what we are saying is it's not just through tenant purchase schemes. Now you can actually go out and build your own home. So if you have a plot somewhere, you can approach any of the banks and they finance you to build a home. And on average, from what we've seen from the industry, like from us at ABSA, we finance you for up to 20 years. And that talks to what Jeff was commenting, that you can borrow the same amount, but you stretch it for a very long period, up to 20 years, for example, and then the monthly repayments are less. The interest charged on that mortgage is lesser than the SACCO loan or even the bank loan, which is unsecured. So building loans or construction loans is a very, very quick path to you getting a home. Mm-hmm. So instead of building over 5, 6, 7 years, this is a project you can complete in 9 months, and you and your family can move in immediately.
Okay.
And there's something we always say, when it comes to affordable home ownership, it may not necessarily be your dream home. The dream home can come later, but for now you're looking at, as long as it meets the essentials of, is it talking to where you work from, where your kids are going to school, is there infrastructure, other facilities around, so you can go the construction route. The other one, another route of getting a home is a straight purchase. Now, straight purchase is where you go to the bank and they pay the developer or the seller. And for this case, it doesn't not need to be this mega project. It is any house that is within your means. So as long as it is a house that has a title, whether it's standalone, whether it is developed by an individual or someone else's house, as long as it is within your affordable means,
yes,
we can finance it. So we finance you up to 25 years. Most of us are giving 100% financing. So meaning it becomes then very, very easy to acquire your new home.
Okay, so there are different parts, and I'm happy now we have options, and that's quite intriguing. But your first home should not necessarily be a dream home, man. You know, you have a gate, you drive in, then there is a huge parking space for 4 cars. You know, the way we envision our homes. Then you're being told, by the way, my friend, just do the essentials. Are you able to live in it? Are you able to go to work? Which is quite interesting. And talking about, because Nelly mentioned the issue about mindset, I want to bring you in, Joseph, because this issue of affordable houses has been the talk of town. And that is almost being conflated to cheap housing. So when I hear anything affordable housing, I want to walk in and you ask me for 200,000, I can get a place. But most of the times it doesn't happen to be that way. So help us understand when it comes to housing, how do we differentiate affordable housing, low-cost housing, yeah, and cheap housing?
And KMRC for putting this together. First, affordability. There are 3 classes of houses. We have the affordable, the social housing, which is what people call low-cost housing. These are basically, they don't make economic sense to developers, and that's the reason why we have such a huge shortage of houses within the urban centers. The second class is the affordable housing, and I'll come into details about the affordable housing. And the third class is the market houses, market-driven houses. In the country, we supply about 50,000 houses, mainly market houses and a bit of affordable houses. If I can go back to how the first 500,000 houses were conceptualized, then the next group of the 1 million houses within this administration. In the previous regime, the baseline numbers of 2016 from NSSF, what people are contributing towards, these are employed people, were about 2.5 million people who are salaried and contribute regularly to NSSF. Out of these, 73% of people earn below 75,000. 73% of Kenyans. About 24% of these people then earn between 75 and 160,000. The third group that earns beyond 160,000 is only 3% of Kenyans. So the biggest group, if you look at the 24% times the 2.5 million, that comes to about 520,000 houses.
Okay.
And that was the first area that the government thought if we provided incentives in this area, we can then eliminate this major group of people,
yes,
which is affordable. So you have sorted the market because the 3% and above of Kenyans can afford a house. The ones, if you eliminated the 24% from rental, then the social houses would be available. We are talking about the houses which are unplanned, which are many. Eastlands, areas on the outskirts of Nairobi. Now those would then be available to social housing. Then we would then be able to come and address the issue of the 73%. In this new regime, they have expanded the affordability to cover the affordable class and the social class. And that's the reason you are seeing the current president and the State Department doing both classes. We have affordable and we have social. You know, the upgrading of slums, like the recent Kibera, Mukuru, that then will expand the market.
Yes.
But how do you define an affordable house? It should be 30% of household income going towards owning a home or rent. And because of the demand of houses within the urban centers, that is not even possible. I've shown you 73% of Kenyans earn below 75,000.
Yes.
So it's very hard for you to use 25,000 in this economy for your house, yet you are taxed. That is not net.
True.
So that's the reason that we have been having that.
Okay.
But from a financing perspective, there are various issues which have affected the issue of banks. All of us are bankers here, offering mortgages. The main three are competition of capital between mortgage and short-term loans. All of us, if today you give somebody a loan of 25 million or even 5 million in a mortgage, they will pay you over 20 years, as John has said. Every month, you receive one installment. If I give an SME a loan of 5 million or a car, they will give me for 4 years. An SME will take 5 million, every month they are trading. So I'm making a lot of money.
Yes.
From this money. So people have shunned away from the mortgages, and that's why he said we have 26,000 or thereabout mortgages. The second item is the lack of long-term deposits.
Okay.
In modern worlds, mortgages are funded by pension. In this country, it's funny, we all contribute towards our pension, which we get at 55 years. But in the course of the pension, it doesn't serve you. You remember we have enabled the issue of 40% pension and that. I think and the last one is the issue of what are the returns that when a developer develops a house versus investing other alternative securities. For instance, if you buy a government bond today, 14%. If you look at all the adverts in the newspapers, returns on houses, 8%. So you'd rather invest in government paper.
Okay.
So I think all those things then had affected the issue of deployment of affordable housing, especially to the social sector.
Okay.
But I believe that now that the government is leading this, KMRC has really changed that landscape.
Okay.
It has addressed those three issues that we have talked about.
Okay.
So we believe that we are on the right track now.
Definitely. And I love the honesty about, you guys being bankers, and investors look for returns. At the end of the day, people want to make money. So if investing in housing does not give me as much returns as me buying government securities, I won't. So the question is, how do we incentivize that? And I'm glad we come into KMRC and what you've been doing. Now I want to speak about the customer, because KMRC say they are supplying you guys with liquidity. So you should be loaded. You guys should be having money to give out, and Kenya should be coming to you and saying, oh, there is money that was given by KMRC, and I need that for housing. So talk to me, Beatrice, about this, how a normal Kenyan can approach and get this particular facility that we are receiving via your banks from KMRC.
First, thank you for giving us this opportunity to demystify home ownership. The information needs to get out there, and it's true, we are awash with cash. We want to give out this money, and we want to just let people understand and know how do you get that money. So the first step, the customer journey starts with visit your branch, visit your bank, and first find out before you do anything. You mentioned earlier that the mortgage process can be very difficult. That's the perception out there. It's not that it's difficult, it's that it's a process. It takes a bit longer than your normal, you talked about a personal loan. Yeah. So of course the documentation will be different, the process will be a bit longer. It's not difficult, it's just a bit more longer. So before you even get into that conversation with your banker, it's important to know first, how much do you qualify for? You know, so that even before you start expending and spending, before you've even gotten your mortgage, understand how much do I qualify for, so that you know exactly what am I going for. The second thing that you need to do before you engage is to look at your CRB report, because you can go through that whole journey and then you don't have a very positive CRB report. And there goes your journey, and there goes all your energy so far. So with first those two steps, that's where then you start to engage. You're good, you understand, I can qualify for 3 million. I'm good, no negative CRB report. Then now you can start on the discussion into, do I want to purchase or do I want to construct? Now for construction, no, I think I'll start with purchase. Yes. Purchase is the easier process. You have a property you've identified, you have a buyer, you have a seller. So the first thing you need to do is to agree on the price. What am I buying it for? Do I qualify? If I qualify for 2 million, you don't want to have a conversation about 4 million. Yeah, so you need to go and find the right property within your repayment ability. Once you've agreed and you've signed a sale agreement, then we look at your income. If you're salaried, we look at your payslip and we look at your bank statements. Do they speak the same language? So that speaks to affordability. Another thing we would look at then is your sale agreement. Is it tight? Have you paid the necessary deposit? Where the bank is coming in with 100% financing, the developer also needs to know that there's that arrangement that he's going to wait for the full 100% financing from the bank.
Okay.
That's for a salaried person. If you're in business, then we look at your cash flows. Can your cash flows afford you to pay for this mortgage in the long term? Okay. And we also look at your profitability, because you see, with a mortgage and you're in business, we're not looking at your cash flow to pay for your mortgage. We're looking at after all your business and your profit. That's what you have open and readily available to pay in the long term. Okay. So that's what we look at. We look at your bank statements, we look at your cash flows, and we look at your profitability. Okay. The difference between purchase and construction is that now when you come to construction, the property, of course, should not have any encumbrances. And by encumbrances, we mean that it will not have a problem if we have to now go charge it with a bank. We need to take that as our security. So there is no dispute. Actually, to put it very simply, there is no dispute in that property for us to be able to take it as collateral. And then now we give you financing in tranches. One of the things that we require is that you have to have approvals for you to build from your county government. And you also need to have the right bills of quantity to show, indeed, it will cost you 2 million. Because it's what we find with construction is that if you don't use professionals, you qualify for 2 million. But the project maybe requires 4 million. If you go to a quack, he will tell you the house will actually cost you 2 million. But in actual fact, it will cost you 4 million. So you find that by the time you're finished with the financing of 2 million, you can't qualify for any more money, but you have a shortfall. You have not finished your house. So you're possibly paying rent. Now you have a mortgage that you've started paying, and your house is not complete. So you find yourself in a very tight financial situation. So it's important for people who are constructing houses and from a financial perspective to use professionals.
Okay.
They come at a bit of a cost, but you see, the good thing is there are levels. There are levels for all the professionals.
Yes.
So if you're doing a 2 million house, use a professional who will charge you commensurate to the kind of money that you're spending.
Okay.
But you must use professionals for construction.
All right.
And that's the difference between construction and purchase.
Okay.
Yeah.
That's quite incredible. Yeah, so I have to get my CRB in order, yeah? Yeah, this is a question to all of us out there. How many of us know where we lie when it comes to that list of credit reference bureau? Because for the longest time, CRB has been synonymous with, defaulting on some of these mobile lending platforms. You'll be listed on the CRB. But that credit reference, bureaus and that information is critical for other things. So I think it's high time we also start utilizing some of this information to sort of better our lives, yeah? So how can I better my credit rating? Then after that, can I utilize that? Enter into a bank confidently saying, okay, how much do I qualify for? I qualify for that. Now at CRB, how is my rating? If it is okay, then I stand a high probability of getting the financing that I need, which is critical. So check your CRB, which is very important. And, Joseph was bringing out some interesting numbers that are quite alarming. Essentially, 70% of Kenyans, yeah? It will be very difficult to own a home because now the government is trying to do, of course, it's merging the two between the 70% and this 30% who earn between 75,000 and 150,000. Yeah, but again, our economy is highly informal, Geoffrey. Yeah, and I think when it comes to that, since 80% of our economy is informal, means now we are not salaried. You have to check our cash flows for our businesses and our engagements. At the same time, some of the businesses do not have that because they are, informal businesses. And you guys are saying, we are also targeting you. You can be able to sort of get financing if you get your house in order. Talk to me about some of these reforms that KMRC is trying to bring into the market to sort of make it possible for every Kenyan to own a home.
Thank you. And actually, you are very right. And just going to what Joseph has alluded to in terms of that category. And that is actually what we call the mortgage gap. Because the mortgage gap was defined within that parameter of 150,000 and below. Of course, excluding the social housing at the beginning. I think the market is big. And this market serves both the employed and the self-employed. And some of the things you find that have been a challenge, especially in the banking, sector for financing, is assessing, the viability of the informally employed people, because they have irregular incomes, documentation is an issue, and actually that is something that, as an industry, we are looking very keenly on how to have to come up with alternative, credit appraisal, mechanisms, because we need to push down credit to that Juakali artisan in a very favorable way, so that they are able to access the same facilities that an employed who has a pay slip that is very well defined and documented are able to access. So there are mechanisms that, and currently we are working on a program to see how we can come up with a system that will enable the financial institutions be able to assess credit. And we are calling it alternative credit assessment tools that we can actually implement in this in this market. So that is something that we are working on. I know a few of them have developed their own, yes, and they are assessing, but we have still realized that there's a market that is not being served well. And that is something that, as an industry, we need actually to look at how do we then, give access for those, because then that expands the offering. Okay. Yeah. So that we don't just talk about employed and the salaried. Okay. Yeah. Secondly, when you look at some of the things also we are looking at is the policies that revolve around incentives that the government is giving. And so far, there are quite a number of incentives that the government is giving towards affordability. Things to do with waivers, to do with some duty for first-time homeowners. That is something that has already been documented and is being implemented under the affordable housing program. So where a project has been approved through the government as a government project, then once you buy from such an establishment, then you get a waiver as a first-time borrower. So there are mechanisms that the government is putting in place to ensure that more people are afforded, to bring affordability closer to the people. The other thing that we also noted as we develop the market is that interest relief on mortgages was only accessed by customers who are borrowing from financial institutions, that is banks. Customers who are borrowing from SACCOs are not accessing the same interest relief on their mortgages. So that is something also we have highlighted so that we can have a level playing field.
Yes.
Yeah, so that even those customers that are borrowing from other institutions other than banks, because today when you look at KMRC mechanism, we have SACCOs that are also lending. So their customers also need to have that benefit so that they can get a relief on the interest they are paying on their mortgages. Okay. Because those are some of the benefits. Actually, when you look at the reason why people should use a mortgage as a means of acquiring an asset, because there are benefits that actually you get. Because the interest you pay, you get a relief on it. And that is very different from the other loans that the financial institutions are giving.
Yes.
Yeah. So that gives an advantage to using a mortgage as a means of acquiring an asset.
Oh,
yeah. So there are quite more reforms that are coming up,
okay.
And we continue working with the institutions. And what also we are doing is standardizing mortgage processes, because you realize all the institutions have their different ways of underwriting, assessing credit, processing loans. And we would want to get to a point where once we standardize these processes, then this institution can actually go to the capital market and have what we call collateralized, bonds. They use the mortgages and they're able to access funding from the secondary market.
Okay.
They will go and package this as a means of tapping into capital markets and be able to raise funds using the mortgage-backed, as a mortgage-backed securities.
Yes.
Which is happening in other markets. When you go to South Africa, they're actually able to raise funds. Today, when you look at ABSA, they could be sitting on a mortgage book of, let's say, 100 billion. If you package that and you go to the capital market, you can actually be able to access 100 billion using that as collateral, and that money now is available for you to go and generate more mortgages.
Mm-hmm.
Yeah.
Yes.
And those are some of the tools that actually developed markets are using. We need to have the same here in this country.
Definitely. Actually, Geoffrey is calling you guys out. Markets are doing things outside there. Why are we not doing it? But you alluded, sometimes you weigh interests and be like, if I purchase government bond, if I'm going to get 14%, my friend, you can't coerce me into getting into, lending more into mortgage, for example. And there is that crowd out effect. And I'm glad that he's putting you on spot. So Nelly at Stanbic, yeah? Are people coming for this KMRC money, first of all? How much have you given out? I mean, how much do you have? Maybe we can start from there so that we know so far what is the uptake rate. And if somebody walks into Stanbic right now, yeah, I need financing for my house. Will I be taken all round? Should I come with my CRB papers? Or what's the process like, briefly?
Thank you. Thanks, Noah, for that question. So, as Beatrice mentioned, we are awash with cash. KMRC has played their part in making this funding available. As a bank, at the moment, we do have an approved amount that we actually have from KMRC of about 1 billion. Mm-hmm. We've already disbursed a third of that. So we have enabled Kenyans to own home up to a third of that. What I like about KMRC is that the push is also coming from them, telling us, you've done a third, we are ready to give you more. How fast can we also be able to take this to market? So it is pressure on both sides to enable Kenyans to own homes. In terms of the journey, when you walk into Stanbic, first to be clear is we will finance you for affordable housing if you bank with us or if you also bank elsewhere. So we are also looking at new-to-bank customers as well. The second key message is that this is housing for everyone. You don't have to say that if it's a facility coming from a bank, I have to be salaried, it has to be this consistent income. So we are also assessing businesses. So we are offering the financing to both salaried and non-salaried. The requirements would be aligned to what Beatrice has mentioned. So if you're a salaried person, we'll look to see your ID. We'll want to see your KRA PIN. We'll also want to see the title of the property that you have identified. In the event you don't have a property you've identified, but you are interested in this offering, we've gone a step further and we have partnered with certain developers who are putting up these houses. So you can walk in, we look at your income, we tell you this is the amount you qualify for. If you don't have a property, we actually take you to developments that we have within that space and within the affordability range that you have, and walk the journey end to end with you.
Okay.
If you're a business, it's the same process. The only requirements that we do have is we will request for your company registration certificate. We'll also want to see your memorandum and articles of association. And we'll also want to see your CR12 report, which is a standard report that just shows directorships of the company. So we are trying to make it as simple as possible for Kenyans to own home.
Okay.
We are also in a journey of taking it a step further and enabling you to know how much you qualify for before you even come digitally. So we are building a platform where you'll be logging into the app, and you just based on the income that we have for people who bank with us. For those who don't bank with us, we'll be using third-party data and tell you, Noah, you have been pre-qualified for an amount of 5 million.
Okay.
Then we take the step further and tell you, if you do not have properties, here's the link of properties that you can actually look at that are within that range.
Okay.
Yeah.
Oh, that's quite incredible. HF, you know you're synonymous with housing in this country. Tell me you've disbursed more than 60% of what you're given by KMRC.
For us, the first tranche we did was about 1.2 billion. And maybe because we have been in this business for over 59 years. What are we doing? Ours has also been a journey, a very unique journey. In terms of addressing the unsalaried market. If I can give you an example, we worked with the artisans from Gikomba, and we went there, talked their language, met in the places they do, and we started a home savings journey with them, about 300 of them. We took them over 3 years. The savings journey. You get 1,000, you save 2,000, you save digitally. Eventually, they was actually supplying materials to the Park Road site. And we appraised most of them within the affordability. And you can be surprised that these people get so much money because you supply $5 a day, you get 5,000. They save 3,000, they consume 2,000. Through that journey, we managed to get 88 of them approved for houses, and actually 45 of them are actually living in their own house. The unique thing about this is that most of them were on the CRB. So we agreed that if you can consistently show that you have constant income, and they didn't have salaries, because most of their money goes through mobile money. So that is one of the things that we have been able to do.
Okay.
The second thing is that we have our own properties, which qualify within the KMRC range. We have supplied them to the KMRC. We have lent to them. We still have new properties that we are selling within the KMRC. We are grateful that KMRC has actually expanded the commercial line, the FDB line, to 8 million. So we are able now to tell you, pay a certain deposit and pay the equivalent of rent for the next 15 years that you can be able to afford.
Okay.
The third way we have partnered, or we are doing around this KMRC funding, is that we have partnered with developers who are developing within this range, and we are offering these packages on this. Recently, we just launched another project of about 700 houses, which is within this range.
Okay.
The mortgage, the KMRC will be there.
Okay.
We believe by the time we are done with this, we will have exhausted what KMRC is having. So we are challenging them that over the next few years, they should be going back to the market to fundraise. But for us, we are on the first lane on this.
Okay. That's incredible. So the ball has been thrown back to your court. I think it's critical, that uptake. And it's quite interesting that, that unsalaried market, because many Kenyans were there. Yeah? And we were wondering, okay, this housing agenda, it feels, they need my pay slip. But you could be doing something, your business. You make 1,000 bob, 4,000 bob a day, and you create a plan of saving. Then you will be able to start your journey towards home ownership. But Absa, if I walk into Absa right now, will I get this KMRC financing?
To state our purpose at Absa. Absa Bank, our job or our purpose is to empower Africa's tomorrow together, one story at a time. So we partner with KMRC, we partner with you as a customer. So indeed, we are shareholders of KMRC, and we have accessed the kitty. We should be having the largest share, almost 3 billion. That should be quite some to assist most of us acquire new homes. And the process is easy. You actually don't have to start by coming to the branch. You can log on to our website. You can visit any of our social media handles, that is Twitter, Facebook, and talk about how do I get a home. And then someone will reach out to you and walk through that journey with you. In terms of branches, we are able to deploy it across our 82 branches, across the counties, not just in Nairobi. And our teams are trained to have these conversations with you and to help you walk that journey, because as we shared, it's a long process. So you need someone to walk with you, with you even with the professionals that you're going to involve. So when you hear saying pamoja tunawiri,
Yes.
it's because we are down there and we really want to make it come true.
Okay.
Yeah.
And that digitization aspect is quite an interesting one, because we will be coming to that, especially for young people. Yeah, we want to do everything on our phones. Yeah, if we will be able to apply for housing finance via TikTok, that would be awesome. But I know we have to create platforms for that. KCB, are you also, what percentage have you disbursed so far to your customers, and are they excited about this product?
Yes, our customers are we have a very big customer base, and our customer base sits squarely within that eligibility criteria. So Stanbic beat us to the game. I think they were in there very, very early. So we have a portfolio of 2 billion to disburse, but we launched our product mid-Jan, going into the end of January, and the response has been pretty overwhelming. There is a need, and people really want to own property. So we are now in that journey of just bringing in the people on board. And like my colleague has mentioned, we are on the ground. And for KCB, we have 205 branches. So our spread is big, and we do not do mortgages anymore from our mortgage centers. I think our historical mortgage business had been done in very specific branches. So now we're saying that we are in all our 205 branches. And our target market is basically every Kenyan, whether they are in Kenya or out of Kenya.
Yes.
So we have a very vibrant and busy diaspora team. And this product is also for those people out there, the Kenyans actually living abroad, but still within that eligibility criteria.
Okay.
Yeah.
It's quite interesting. So you are beyond borders, yeah? I remember that song, Navuka Border, I think I was a child back then. The musician is in politics now. Quite interesting, yeah? And that is the evolution of actually, especially young people. Because, Geoffrey, thinking about KMRC and the current population, Africa, yeah? On average, we are below 20 years old. We are a very young continent. So, but when you look at, for example, a sector like agriculture, which is the backbone of this economy, the average age of a farmer is 60. So there is always a disparity there. Either we are growing into our 40s, then we start specializing in some of these things. In terms of getting young people to own homes, especially I see South Africans, somebody's 24, has taken a photo on Twitter, I'm now a homeowner, single and home owning, You're wondering, guy, is that a dream that will come true? In terms of the demographic that we're working with, is that also one of the intentional aspects that you're looking into?
No, you are so right. Because when you look at our population today, I think the biggest chunk of our population is actually below 40. Let me use that, below 40. And that is why purposefully when you look at the way we have positioned the product, is that this is a long-term product. And the long-term product is to enable the young Kenyan to take advantage of that long tenure, so that in your 20s you can effectively start your home ownership journey. Because that is a point where you don't have a lot of commitments and you are starting life, and that is where you are starting with that functional home that John talked about. Because at that point, you want to start investing, acquire your first loan at that point, your home loan at that point. When you are 20, 25, you've just gotten your first job. And when you look at the pricing, here you are talking about 9%, 9.5% fixed interest rate for 25 years. On $1 million shilling, you're talking about 8,500 on $1 million shilling. So if you can actually extrapolate that, if you're taking a 4 million house, then just multiply by 4. It is within the startup, for that generation that is starting life. So start with that, and as you develop, as your income, improves, then you are able to, because you've already acquired an asset, and this asset is actually gaining because it's appreciating in value. In another 5 years, you find the property you bought at 4 million, it is now sitting on a cool 7 million. You've already acquired, you have a capital gain. And that capital gain, you're able to take an equity release and now start building your future home. You get? So it is actually the best thing to do, and that's why it's taking care of the young people. So we are addressing that population that previously was left out by the offering that was there in the market.
Okay.
Yeah.
Nelly, I'm glad there's mentioned young people. And at 25 starting your job, but also we are juxtaposing this with the environment that we are in right now. Very high youth unemployment rates. So people are going into their own businesses. And again, you look at the survival of SMEs. It's quite low. Majority of them do not hit their 5th birthday, even 3rd birthday. I mean, they kind of collapse. So we are also in this corner. And I want to gauge by the uptake of these products. Who's coming for this loan? Who's curious enough to walk into a bank, into that online platform that you've created as ABSA and say, I want to own a home? What's the average age of that person?
Actually, what Geoffrey has mentioned, this product is actually addressing the age group of first-time home owners. What we have witnessed of people coming for this home, and I think one of my colleagues did mention, is it does not have to be your dream home. Yes. It's just socializing and letting people know and asking them, so how much are you paying for rent? Say 25,000. You tell them, do you know you can actually pay the same amount towards home ownership? And we've gone a step further and shown you here are the developments that actually can get you to that. So what we have witnessed, it's typically somebody who's just starting out, first-time employment, and it's in the range of between 25 and 35 years. That's where the bulk of the interest is. Yeah.
Joseph, is there that fear that, this monthly amount that I'm supposed to be paying, yeah? In case 1 year down the line, I'm not able to sort of pay this 25 Gs, then I'm losing my property. Is there that element? And also the psyche of, I'm still young, man. Let me do, as young people call sherehe. Tupige sherehe, tukianza ku approach 30, then we can now start thinking about owning a home. Is there a psyche change that we need? And secondly, that fear of getting into housing finance?
For us, there is that fear, but for us, we have observed very emerging trends. For instance, there is this emerging trends around the gig economy. The young people don't want to be, they don't want formal employment. They also don't want to live in one place. Unlike our older generation, where people would sacrifice and live very far, this new generation really wants areas which are convenient with them. And what we have seen then, there is a huge emerging market of smaller houses. If you go to the upmarket today, you'll find studio apartments at 3 million, studio apartments at 5 million. You go to Kilimani and such areas. So you are finding that there is that big economy of people coming into that, and mainly driven by young guys who have a gig economy.
Okay.
What they don't, what they consolidate, or how do you call it, they tell themselves is that since I've been making this money from YouTube, from TikTok, they have created regular, programs for themselves. So you'll find that they might not have that salary, but they can be able to demonstrate to you that every month I'm able to make this kind of money. So that is a new market that we are seeing. On the issue of the mind shift, that the psyche that you have talked about, what needs to do is the alternative appraisal models that Geoffrey talked about.
Okay.
How do you, today, if you walk into a bank, as all the bankers here have said, you come either with your business statement, your salaries, they take you through the same process. But there's something, I think it's Stanbic said that before you even go to the branch or to the office, you can self-appraise. Those are going to really change the dynamics of how these young people are interacting about mortgages.
Okay.
Finally, I think it's the issue of demystifying. People still associate mortgages with the issue of losing houses, especially in the early 2000s when the rates went up to 30% and you couldn't keep up with the mortgages. And people then were being auctioned a lot. With the entry of KMRC, you should be able to tell you, as Geoffrey has said, start your journey here, but there is also a huge secondary market that needs to be developed. How that will happen is, if today you started with a 1-bedroom when you left school, 5 years down the line, you have brought in your other partner. Now you are 2, you need a 2-bedroom.
Yes.
There should be a secondary market, and that is very robust in India, where you just take this to your bank. They have a list of people waiting for the 1-bedrooms. They sell the 1-bedroom, your money becomes a deposit for the 2-bedroom, and you move into the 2-bedroom. So that we need to work closely with KMRC to develop how the secondary market is working. Most importantly, because if we don't regulate the secondary market, the prices then will become market-driven. So the benefit of preparing the affordable housing will be taken off. And what the government has done, if they are buying under this concessionary rates, the benefits, you shouldn't offload this property for 7 years. That way we are able to lock in speculators who come in, buy today, tomorrow they are selling for 7 million. So those are the kind of things that are going to change the psyche of this economy.
That's quite incredible. Beatrice, I'm thinking, at 25, how much was I earning? Let me see. I wasn't making that much, to be honest. Yeah? Maybe still not making that much, but I just thinking, if I want to start this home ownership journey as a young person, yeah? And I think it's been sold very well that you can make the sacrifices in the earlier years, then you can build on that, yeah? I don't know, from KCB perspective, since you boast of rich across the country. So you're reaching, many of these young people. Is there an excitement amongst young people, or we need to lay this foundation of, first of all, this is what it entails to own a home, and it's not sort of imprisonment and you risk losing your home? What do we need to do for that 24-year-old, 23-year-old?
So much excitement around that population because, like Geoffrey has said, it's a big population, so we can't ignore it. Yeah. What I think we need for that population is a lot of engagements, information, knowledge transfer, because they also want to live the life our parents lived at their age now, If they're able to, fantastic. I mean, with the YouTubers, the TikTokers, they're making a lot of money which our parents didn't have at their age. So at that age, for that kind of income, it's good. I mean, they can get into home ownership. But the larger population of the youth is actually not there. So it's about making them understand this is what you can qualify for today. I mean, it's just like what Geoffrey is saying. They can own property, yes, but it won't be in Runda. You get?
Yes.
It won't be in Muthaiga. So own what you can own today with your available income and then grow into home ownership.
Yes.
Joseph's example is so fantastic, and it actually talks to the youth. Own your one bedroom today, because tomorrow it's easy to offload and get into your next home ownership of 2-bedroom, 3-bedroom, then to your dream home. So there is excitement. They want to own homes. They just need to understand that my income, like you've said, if it's 10,000 today, 25,000, what does it qualify for you in the market?
Yes.
Yeah.
Very important.
And then yes, you're able to own your home. So it is possible. We just need to tweak a bit their thinking.
Okay.
Yes.
That's quite interesting. So you say, we are securing the future of Africa one person at a time, one youth at a time. This one youth is looking at you right now, Mr. John. He's looking at you and he's wondering, okay, am I able to do something, work with you guys to start my home ownership journey? And is there excitement amongst young people with this product, especially since it's concessionary, as we've been told?
Thank you, Noah. We have seen a lot of excitement because when you go into companies, we have many companies. We work with about 3,000 of them as a start in terms of the salaried side. And when we do the financial literacy sessions that we do in those companies, you find those inquiries coming from even the youth. And I like Geoffrey's factor that when you think of affordable housing, think of, if you are young, 1,008,000 shillings. So if you see a house that is going for 2 million, you can imagine that it will take you only 16,000. If it is 3 million, that's 18,000. And then start becoming, it's 24,000. It starts becoming easier to comprehend that I can now actually own a home. And I think the fear that I may not be able to stay with this mortgage for very long, it may fail. There have been developments over the years around mortgages and loans. A long time ago, when you'd take a mortgage and you wanted to repay it, you'd be penalized. Today, we don't do that. So even when you're talking to that person who is making a lot of money in the short run, as much as a loan for predictability is stretched for very long and the rate is fixed for very long, you have the flexibility of repaying your loan early with no penalty, which then means the average mortgage life then reduces to almost 8 to 10 years, which then gives you comfort for you to take the first one, accelerate it with additional income that you get. If it is those side hustles that you're doing, if you get a bonus, and it should help you complete that one and prepare for the next one.
Yeah.
So yes, there are options and excitement in that space.
That's beautiful. It's such a relief for majority of this country, which is very young. Now I'm looking. There is also preferences. Yeah, people want to own homes. For example, let me give you a personal example. Yeah, so I live in Kawaskari. Yeah, and my landlord, there are those people who bought land there when it was still a forest. There was no Thika Road. Now these days, people are, getting a piece of land along Thika Road, it will cost you an arm and a leg. Yeah, and a lot of people are not willing to go into the village, 2 hours away from Nairobi to sort of start their home ownership journey. There is always a preferential towards urban settings because a lot of activities happen there. As KMRC, maybe Geoffrey, you can talk to me about this. Is there also intentionality in terms of, I know through the banks, the spread, where these properties are located, the options that we are having, that you guys are offering, are we seeing more leniency towards, can I get a property in urban setting? And you see now that might cost you higher. And when you check at your income, maybe it's not measuring up to some of the properties around, urban setups. Is that also sort of locking people away, and we should start opening our mind and options in terms of, maybe I could get somewhere past Kamulu there?
When you look at an investment, you need also to be daring. And you can create your market. Because today you are looking at Thika Road, you're looking at the bypass. There's a famous place for Nyama on the
Kamakis.
East Kamakis.
Yes.
15 years ago, there was no Kamakis. It was in the middle of nowhere. But today, land in Kamakis is among the most expensive on that route. An acre should be going for 15, 20 million on that area. What has created that? It means that is an emerging market. Things are opening up. So don't fix yourself at Kilimani because of that convenience. Ask yourself, in another 5 years, 6 years, what is it that you want to see? So they are emerging markets, and that is why when you look at the offering that these institutions are giving through KMRC funding, it is open to all the counties. And in fact, we want to see more money going to the counties, because that's where you start creating home value for most Kenyans. Because most Kenyans are in the rural setup. Yeah. Because today, if you are able to have a home in Kakamega, a home that is functional and working for you, then you are a better person. Because then that improves your livelihood. Yes. So this money is actually available. You can take a home loan in whichever part of the country, as long as it is within a setup that is serviced. Because also you need to look at a place that is serviced. At least you have access to a road, you have access to facilities, so that it's a functional home. So that even in the secondary market, tomorrow if you want to upgrade, you can easily sell the property and use that as deposit to go and acquire a better house. Yeah. So those are some of the things that we need to look at.
Okay.
But these are emerging markets, and we continue creating value. And don't fix yourself within that 5 minutes distance, because you'll go to Wangige and you find actually there is even a better property there which will give you more value. Because why would you spend 60,000 on a bed sitter when you can just move slightly out and spend that 60,000 for a 3-bedroom that will house your full family, and you're just spending an extra 10, 15 minutes? Yeah. Options are there.
Options are there. Explore your options. And I love the banking lingo. Yeah. Just look where you are. Yeah. We find you where you are. Majority of the people come with me, I'm gonna get help, by the way. Then reality hits you like, you fall here, the way these water levels are different. Yours is here, whereas in your mind it's here. So, Nelly, I want us to chat about, I know we might have touched on that, yeah, but the innovative ideas that we are having. Some of you have mentioned, websites and whatnot. The innovation that we will, after this conversation, still continue to demystify home ownership. What are those changes that we are seeing? What are those tools that we're using to break down these walls of the name of mortgages, that have for the longest time kept people at bay? No, I don't want to go into that direction. Is there innovation from where you sit that is helping break this down?
Lots and lots of innovation. Actually, I'd say for every challenge identified in this journey, there's an innovation that is done or is upcoming or is in progress. If I look at the journey of demystifying home ownership, conversations like we're having here are actually breaking that barrier. We are letting people know that it's not just for people at a certain class, or you don't have to work for so many years and say my income has to get to X amount to own. So that is happening. I've also mentioned about the digitization process of making it even easier for you to know, because there are people who are just taken aback and put it in their mind that I don't qualify based on what the income I earn. So the fact that we are working on scoring models that will even look at your third-party data and say we've considered all this other additional income, and you actually at the touch of a phone can see you qualify for X amount of money. Creating marketplaces where developers can also upload the properties that they have within our portals in the bank and show you the options that are available is also a way of breaking that barrier. When we come to the conversation around high cost of construction, we have seen innovative ways that developers are actually reducing the costs. We've seen prefabs coming into the market, use of interlocking blocks. So it doesn't have to be, we don't have to fixate ourselves that it has to be brick and mortar. There are other developments that are coming up and are breaking up that barrier on the costs.
Okay.
On the conversation around I need to have bulk amount to own the property due to the associated cost, like stamp duty cost, legal cost, valuation cost. KMRC is offering up to 105% financing. So over and above the amount that you are looking, they are giving you an additional 5% to take care of this associated cost. So it's a journey, and what I like is that we are seeing progress both on the developer side and also on our side as the people who are offering this financing.
Okay. Incredible. Joseph, you are calling yourself the OGs of housing in this market, old guards, I know some people say old gangsters. No, it's old guards, Talk to me about, because sometimes older institutions tend to just remain there, they're very comfortable with the market they have acquired. Now they are sitting very well, but the market is really changing. So are we seeing innovation that is coming quickly and telling Kenyans at the comfort of my sitting room in a bed-sitter, actually I can be reached, and that conversation of home ownership can get to me?
Yes, and what we have, we can't just call ourselves OGs of this because we are also very young at heart.
Yes.
We might have been 59 years in this business, but we are very young at heart. So what we have been seeing is that we have started with the process of home ownership. Made it very simple. If you look at our communication, we no longer talk about interest rates. We tell you pay this amount, and this is the amount you are going to pay every month. We have also products such as life assurance inbuilt within your home ownership journey, so that when you start the journey, should you have maybe permanent disability, should you have maybe death of the breadwinner, you will not lose the house. Those are things that we are building in. What we are also doing is that as you save and you get to a certain deposit, we are unlocking houses within that price range. Yes. And they are telling today your deposit, you can qualify for this house, and these are the available units in the market. Would you then be interested? And we keep graduating that. Okay. And we keep taking you through the journey. How far are you from your next preferred unit?
Okay.
Further to this, I've talked about digital savings plan, where I talked about the artisans that we worked with, They never did need to come to the bank. We just have the alternative methods of doing this. And this is being taken up by the youth a lot. People don't want to come to the banking halls.
Yes.
They don't want to come to transact in the banking halls. What they want to come to do in the banking halls
Yes.
are advisory.
Yes.
So for us, the property advisors, we are putting them on the field. So as you purchase your property, you have a property advisor where the property is located.
Okay.
So there are various ways of innovating. So those are some of the things that we are looking at.
Okay.
Some are still in the pipeline, so we might not be able to discuss them here with our fellow bankers.
Yes, yes.
So
Watching out for competition, but also at the same time, with bankers, there's always something in the pipeline. Definitely. That's quite interesting. Beatrice, talk to me, and later on, we'll be taking your questions, actually, right here, as you can see. This is him, yeah? You see, it looks very different, yeah? So we are streaming live, of course, on Facebook and on also YouTube. So if you have a question, you can just comment there, down there. We'll be able to see your questions. We're coming to the Q&A session. So please send in your questions. If you have any question on Facebook, if you're watching us there, type there your question, okay, on the chat and also on YouTube, on the comment section, and we'll be able to take care of that. Beatrice, quickly, the innovations that we are seeing from where you sit as KCB, yeah? You boast of tentacles to the very heart of Kenyans. Are you innovating at the same time?
Yes, absolutely. Like you've mentioned, there's always something in the pipeline, and I will share it here with my colleagues. But it's things we've discussed before. And one of the things is that a big percentage of the population, the urban population, is renting. So one of the innovations is, how do you literally tie that monthly rent, exactly the same amount, into a mortgage repayment? Because normally if you move from renting and you go into a mortgage, all the time you have to add money for your mortgage repayment. But now we're saying, let's look at the actual rent amount that our customers are paying and tie that into a mortgage loan repayment over a period of time. So what does that loan amount look like? So then we sit with a developer and chat a path on how they can deliver the houses within that price point to actually match the rent payment of our customers. Yeah. So that's one of the conversations we're having with various developers, so that we have also a range of properties which people can already just get into home ownership with already existing rental payments that they're making.
Okay.
Then with the informal sector, which is so big also, we can't ignore that informal sector. So we are already having discussions about partnerships that can de-risk this sector. And when we de-risk that sector, then we're saying as banks, then it's easier for us to come in. Because that informal sector has very erratic incomes. They're not consistent, but they have income. So you can't really say they don't have income. They do have an income, but how do you tie that now into home ownership? So we are actually looking for partnerships with guarantee funds that can give us that comfort and be able to probably lend not the 80% or 100% that we're lending as banks, but probably do a bit less, 60%, 50%, and then the rest is de-risked. And then we're able to really reach out to this informal sector, which is very, very big.
No, that's incredible. So concessional, then also build a de-risking element to it so that you can widen the net so that more people can come into it. John, I know about securing the future. You know, your mantra stayed in my mind, yeah? That's why bankers are told, when you go for an interview, please mention our mantra, which is very important, yeah? But you're trying to secure the future. Empowering, actually, yeah? Actually, when you empower, you're securing, but I'm not trying to rewrite that. Talk to me about some of the innovations that you are utilizing to empower these, especially young people, yeah, to sort of be able to start this journey of owning a home?
So I think some of the innovations have been covered. And the next step we've also gone is, remember, you may not qualify for a mortgage with your first salary. And it needs to be part of a financial plan, the goals that you have. And one of the habits of financial planning, one of the things you'd look out for is ability to save, even if it's however little. And that's why you can see even now there's talk of how do we increase our savings. So there are two parts at ABSA Bank that we have set in place for someone who is starting out this journey. I don't know if did you know that Timiza is our product at ABSA, which by just dialing *848#, you can start a savings journey. And you can set a goal of the amount that you want to have achieved by a certain period. And that then talks to setting the deposit, the down payment, or if the legal cost may exceed what the bankers we are setting at 100% or at 105%. Then you can also go to our website and open a digital savings account. And from both you find the returns are extremely good. That should encourage you to save more and more and more. Okay. So those are some of the things we're trying to add to your consideration so that in this journey, you have a practical, easy way of starting out on this journey.
Okay, that's incredible. Utilizing the digital elements that we have in the digital world right now, and even incentivizing savings, which is critical in this home ownership journey. Start saving, yeah, which is important, de-risking, you know, all these innovative ideas. And even as we come to the tail end of this conversation, I know we have touched on how you can access some of, you know, the products that KMRC are offering through these different banks at very good rates, yeah? I know there are emerging issues, especially in the world right now, yeah? Like you look at the US, you see, oh, there's some collapse of the banks. You're wondering, okay, is this the same banks that are giving me sort of affordable housing? How does that go hand in hand? I know there are different markets, but from KMRC, yeah, and you're the people who are getting this funding concessionally and distributing to these banks. Globally, outlook, is it very positive? Are we sort of bullish? Are we positive that we'll get more money? like HF, they say they're done with their, you know, they're almost finishing the disbursements. From what is happening globally, is that something that we should be concerned about as a market?
Maybe just to paint a picture and even the flow of funds, how do these institutions access funds from KMRC? One, we do refinancing. Refinancing means that a loan has been created by these institutions. So they have already given NOAA some money under the program, and that loan is now being refinanced by our funding. So they are already creating a lot of value in the market. By them having access funding, they've already given out money, and it's a revolving fund. The more they create, the more we refinance. Okay. Looking at the sources of funding that we currently have, they are very solid sources because we are dealing with a very solid institution, World Bank, African Development Bank, and I believe, where they sit, yes, they have a better, approach and risk management that will not be seeing a few of those challenges. Mm-hmm. But having said that, of course, the cost of money is going up. Yeah. But as it goes up, as the market develops, then also we tap funding from the local market in terms of the bond. Last year we issued a bond, which what it does now, it gives us sustainability. Because with that, then we're able to blend, because the concessional funding comes at a very low cost. We're able to go to the market and raise a bit of money, because also it gives us a bit of sustainability. Then we blend, and that brings down the cost of funding, and that is what now the institutions are able to access at that level. So there are very many innovations that are coming on, and I believe as we observe the market, we should be able to take a day at a stride. Okay. But we are living in a dynamic economy. Factors, macroeconomic factors affect all of us. But I believe also there is prudence within the banking sector, and there are enough mitigations that are being put in place to ensure that there is protection of the investments that have been put together.
That is a talk of confidence in the system that we have, that everything is well set. So in terms of if you have any concerns, at least there is confidence in this. But I mean, I look sometimes at land prices in this city of ours, Nelly. And that is sort of, I know with mortgage we are able to sort of hop onto a property, but still some people love to, that on financing, be it buying land and building by your own. Maybe you want a specific design, you want a flat roof. I see a lot of people these days they want a flat roof so that I can sit on top of the roof every weekend and just chill in my house instead of mabati roofing. Sometimes these dynamics. But you look at land prices and you're wondering what's happening. I mean, is there an issue that it's becoming more and more unaffordable? Is just that market forces of demand and supply let it flow as it is, or is there something fundamentally that we need to change in this market to bring that basic unit of production we call land, which everything sits on, down?
I think the main challenge on this is access to serviced land. That is where the cost is actually quite high. I did mention that when it comes to buy and build, the total cost of now putting up that home with the flat roof, 25 to 40% of that will go towards purchase of the land. There is the piece that we do need support as well from the government in terms of opening up infrastructure. What we have seen is when working with developers, if they are the ones servicing the land in terms of providing the roads, if they'll be the ones who will also do the water and also supply on electricity, that cost is actually being transferred back to the buyers. So there is also room for also the government to play in bringing down the cost of land.
That's incredible. You want to build on that, Joseph?
I think she has covered it very well in terms of provision of the horizontal infrastructure is one. The issue of affordability is also a factor of distance from where you work. For instance, if you work here and you live in, let's say, Kilimambogo, even if you build a 1 million house in Kilimambogo, there is no affordability because all your money and time and energy you'll be spending commuting. So what has happened in developed markets is like they develop satellite cities. If it's an industrial zone, as you have seen Mombasa Road, they will then take a huge portion of land, service it, and developers then can buy serviced units. Because look, today we have Konza. Konza is a big mega city. Nobody has moved there. Because if you live here and you work in Konza, it's not going to be affordable. The other issue is that there is a lot of land parcels being held by speculators. Today, the government is providing a road connecting maybe Isinya to Mombasa Road. People have then seen the maps and have bought all those plots at an affordable rate and held them, waiting for the road to come. Then when the road comes, the prices shoot up. What should happen within, let's say, Namata or something, is we should be introducing idle land tax. So that if you are a speculator, you should be paying government some money, which then can be a kitty like the fuel levy kitty. Which then can be used to improve these areas. Okay. It's very funny. You'll see somebody building a house or selling plots 4 kilometers off the road. Then people buy because it's affordable. Then they start to complain to Kenya Power, we need power. That one house needs to be fitted with power. That one house needs a school. That one house is complaining to the county, we need this road service, it's muddy. So there's a need a lot about the revolution of the land.
Okay.
Lastly, there is need to consolidate all the land act. You know, maybe you have one, because there are so many rules around land. Then you'll have some land with this title, with others with leases, and that makes the land unaffordable in terms of some of these properties.
Okay.
Yeah.
Huh. Patrice, I know speculators in the market. I mean, that's what happened in a free-fall market, sort of, in an open market. I have the freedom to, but that has become one of the biggest barriers, yeah? As Nelly mentioned, 25 to 40%, the cost is just on land. So even as financiers, as banks, since this is a very huge cost element towards home ownership, is this something that you're looking, and what is your approach from where you sit?
It's very difficult to tame speculation because, like you've said, it's an open market, willing buyer, willing seller. Unless the government regulates that sector, I don't think speculation will stop. And is it something we would want the government to regulate also? I'm not sure. Yeah, I think as a bank, we just need to be more prudent. We can see speculation. So if somebody is buying a plot which we feel is for speculation purposes, we just lend less. Yeah, because we have that information and we are on the ground. Okay. So it's not, do we regulate the market? It's more about let's do prudent lending. And then we give incentives to developers, so that then they're able to build more units, more affordably, and then people can own affordable houses which are very good. You see, the issue of people wanting to build their own home, why? It's because of the quality of what they're getting from the developers. But if you give them affordable housing, quality housing, through giving incentives to the developers to put out very good houses, then I personally wouldn't want to build a house if I could get the quality and the value for what I want in terms of a home. Yeah. So it's about how do we get good homes at affordable prices, and then you'll see people who need to buy land. Then what are you going to do with it? You get
yes.
Yeah.
That's quite interesting. Quality, John. This land issue is very imperative, but again, Beatrice has just brought in the issue of quality, yeah, especially with our developers. I know the only time we speak about quality in the housing market is when something has dropped down, yeah. Or a building has collapsed. Who builds this? And were they trying to cut corners? Yeah, is that a huge challenge? And as banks, have you guys put buffers sort of to protect and also offer quality to the clientele who are trying to get not only affordable, but also quality housing?
Allow me to comment first on the land question. One of the things we have seen, it's in the public domain, that the government is trying to crack that piece of land prices by offering developers, say, land for them to develop. If you look late last year, they advertised almost 56 projects across the country where they're saying, we'll give you the land. For you as a developer, go look for financiers and tell us how you're going to offload those units. So that could start talking to affordability within the areas where people actually want to live. And it may then start talking to affordability for you as someone who wants to own a home. Coming on to the quality, what we do as a bank, remember we finance, as a bank we have two sides of financing. We can finance you as a mortgage taker, where you are building your own home, And in that instance, what we do is, before we approve the loan, we need to see the bill of quantities. Of course, we need to see the approvals by the right authorities, whether it's the county government, depending on the size of the house. We'll need to see NEMA approvals. And then the bill of quantities then from a surveyor. And then that talks to professionalism. If you have it at that point, then it means you're likely to tighten the quality of the house. Then when you're doing construction, we do valuation at stages. So there's when we are starting out, before we disburse the first tranche, we need a valuer to go on and check the due diligence on that plot. After you have done the slab, we'll confirm that you have done it on the right one. And further disbursements are subject to supervision. Depending on the value, again, we can even ask for an architect certificate to confirm on the quality of that house. Then for the one who is purchasing,
Yes.
we involve a valuer to also check on that house. The valuer primary task is to satisfy the bank that this house is of the right quality. And what that does even for the customer, if there are issues that are raised both by the valuer and the lawyer during their due diligence, obviously you will also notice some of those things and say, I may not proceed with this. So on the side of the off-taker, we do that. Then on the side of the developer, again, there is that tight management around those professionals at every stage. So during design, during approvals, and then further disbursements on developments. And that way, it tends to then take care and mitigate on the risk around quality.
All right. Oh, that's quite encouraging. And I'm glad that that land issue is being taken care of, because if we deal with the land issue, also it's dealing with the cost element of it, and which means more people can be able to sort of afford to own a home. Now we come into the stretch end of this conversation. It's been 2 hours, ladies and gentlemen. You guys are very good speakers. That's the beauty about having huge panels, yeah? Just that you speak twice, and 2 hours is gone. But as we finish up, and I'm trying to get questions. I don't know whether my producer, we have questions from that end, because I'm trying to multitask. It's a little bit difficult. If you have any questions, you can just forward them to me. But even as that happens, and please send in your questions. Jeffrey, as we close up this conversation, yeah, do you think we have convinced a Kenyan to start a home ownership journey? And if there is any doubt that lingers, please flatten that.
I think it is paramount that as Kenyans we start looking at home ownership as a means of acquiring wealth. And we have very good products. I mean, we look at these financial institutions, what they're offering you a means of acquiring your asset today. And today, if you are to rent for 10 years, at an average of 10,000 per month, every year you are paying 120,000 to a landlord. In 10 years, how much will you have paid? 1.2 million. And if you fail on the 10th year, the 12th month,
Yes.
to pay your rent, you are a defaulter. And the landlord will not have kind words on you, and they will tell you goodbye, and they'll get another tenant.
Yes.
If you take a home loan under the affordable housing program that KMRC is supporting, and you pay your 10,000 for 10 years, you will have invested value in your property. And the worst that can happen, if you get to a point that you are unable then to progress with that home loan, you have a secondary market that is very vibrant. You have an option of, one, restructuring your loan with your financial institution to accommodate your changes in your financial situation, or you have an option of selling your property in the private treaty, through the private treaty mechanism, where you are allowed by the institution to go and sell in the open market, you get the best deal, and out of that you pay back the bank what you owe, the balance you owe at that point, and then you take home the balance.
Okay.
And that gives you a savings option.
Okay.
So I think we should start looking at that as a way of acquiring wealth.
All right.
And home ownership is actually one of the best. Buy now and wait. Don't wait to buy, because tomorrow the price of the house will be different from what you have today.
Okay.
So Noah, buy today,
Okay.
not tomorrow.
Yeah, that's borderline speculative too.
And that's actually when you look at our slogan. I mean, we talk about keja yako. You know, rent yako ni keja yako.
Yes.
So I'm looking at rent yangu today should give me my keja. Yeah. And
Rent yako ni keja yako.
Yes, rent yangu ni keja yangu. So I'm looking at that rent I'm paying today should be able to afford me my keja.
Okay.
And that talks to the youth that they should think seriously about home ownership through KMRC offering.
All right. Thank you, Geoffrey. Rent yangu, keja yangu. Nelly, there's a question here as we close up, yeah? I'm earning roughly 45K. Roughly. Okay? So I don't know what range that is. Let's say between 40 and 50. Yeah? Roughly 45K. Am I able to get a home with that salary? I'm paying rent worth 15K. If yes, how can I get that opportunity to home ownership? So he's paying 15 Gs, he's earning 45 Gs. Is there hope for home ownership there?
There is hope. I think we have said it during this session that for 1 million, you can get an 8 million. If you're taking a 1 million facility, it would be a payment of 8,000. If you're paying 15,000, that would be financing of up to about 2 million, if we go by that straight math. We can look, as I've mentioned, does this person have any other sources of income to then again increase the value of the home that they do own? We have also mentioned that we are working with developers who are offering these affordable units. So we can, if you were to check on the Stanbic website, we have a list of developers there that are doing affordable housing. Okay. So we also have a mortgage calculator within the website. Okay. So you can go in, put in your income, be able to calculate the value of facility you can afford, and be able to also see a view of these properties.
Okay. So essentially, that is a question by Louise, if I'm not wrong. Yes, Louise. So walk into one of these banks. They look at, of course, your salary. They're saying if you're getting a property worth 1 million, I mean, with 8K a month, you are sorted. Over the past, is it 25 years? Yes, 25 years. So with your 15 Gs, I think you can get a good value for that money. So that's the beauty. You have them here. Walk into one of these financial institutions and get help. Steve Biko is asking, as we finish, what is the better investment in terms of returns between buying bonds and buying apartments? I know we are in matters home ownership, Steve Biko, and you're trying to take us away from that. But in terms of what is offering value, my friend, should Steve Biko buy bonds or should he buy an apartment?
We are in an investor's heart. Maybe the alternative is different. But owning a home provides dignity and security that cannot be measured by the interest rate differential that you'll get between the returns of an investment to a house and a bond. Because that dignity and sense of security for both your family and your investment is immeasurable. Yes. Secondly, there is also capital appreciation that comes, as my colleagues have said. Over the long run, that capital appreciation will outweigh the investment in bonds. So you need to look at the tenor that you're looking at. Lastly, if you collapse the rental you are paying to the mortgage that you're paying, which is essentially what KMRC is doing, then it makes sense to invest in a home.
Okay.
But critically is that it gives you dignity, it gives you a sense of security, and it secures your future.
Yes. Steve, you've heard that? Dignity.
To Biko.
Yes.
I mean, you take $1 million, put it in the bonds, get your 10%, you still live in a rented house. So you are still paying your 25,000 every month. So here you take a home loan, you are living in the same house.
Yes.
You are creating value in your investment. You are getting dignity that actually you own something. And actually that makes you even work harder to ensure that you protect your investment and you even acquire more.
Okay.
And you're getting intrinsic value. You know, something you cannot quantify. When you are living in your own space, there is a certain value you get actually you cannot quantify.
Yes.
You know?
Yeah.
And you know?
Yeah.
Yeah.
Yeah, definitely.
So those are some of the things you actually look at in home ownership.
Okay.
Yeah.
Dignity. That's the selling point of today, yeah? Get a house, get dignity. Rent yangu keja yangu. Beatrice, another question here in the final stretches of this. Should I invest all my money to buy a home or consider rent to own, and will that allow me to save? Which one is the most preferable way that is better? Should I take my money, buy a home? Yeah? You can give me all the money that I want to borrow and I buy a home? Or should I consider rent to own so that I'm living or I'm owning? And which one will allow me to save, at least buy me some time and some extra cash on the side?
Okay, I think all options have their pros and their cons. And it just depends on what's your need at any one point in time. With the rent to own, there are not that many opportunities for rent to own.
Yes.
Yeah. And the other thing about rent to own is you don't have even that intrinsic value for rent to own because the property is not even in your name. Yeah. That's for rent to own because you only get the property when you've completed the payment plan for that property.
Okay.
Yeah. But when you buy a home, there's intrinsic value, there's ownership. Yeah. And then it then gives you an opportunity when you take a mortgage to pay for the long term, it opens up opportunity for you to use other cash flows for other investments. So you're not losing investment opportunities in that respect. So you still get into a home ownership plan, and any other sources of income that you may have can still add you investment income.
Okay.
Yeah.
Thank you very much. I think that clears it. So it's preferable, the rent-to-own systems, I mean, they both have pros and cons, as she said, but preferably if you can buy, get financing for that. It's better, unlike rent-to-own. And I know there are risks accrued to this. Before I come to that risk, John, I know there's a question here. I don't know whether it was sort of rhetoric or just, thinking about it. Why does it seem difficult to own a home in Kenya? I hope this conversation has helped, by the way, with that challenge. Bei ya land iko juu, interest rates zinatumaliza, tunaumia kwa ground. And I mean, hopefully from what we've gathered here, hope that journey has been made a little bit easier, But again, that element of ownership, and this is a question to John. The risk of it, if I'm not able to complete my monthly payments, I know during COVID, banks, you sort of work together with government and your clientele to, it's difficult. We can give you sort of a relief. Don't pay within this period of time. I don't know if somebody enters into this agreement. Are there such provisions? If at all, nimefika mwisho. As a young man who said, nimefika mwisho bana, sina hii pesa, maybe I've lost my job, my normal income. What happens? Do I lose my property? Or what provisions are there to protect me as a clientele?
Thank you. If we start with the COVID situation, I think we demonstrated our willingness to work closely with our customers.
Yes.
To safeguard them against the implications of not paying their loans on time through the moratoriums we were giving. Where we are today, when we take a mortgage, we anticipate that most likely the way you lose income is possibly maybe through retrenchment. Otherwise, you don't voluntarily resign when you know the obligations that you have, and then you say you're not in a position to pay. So we factored that in terms of the insurances that we take that cover retrenchment for some months. At least we sort out the repayments, while we know that unajipanga tena, probably get another job, because as you said, you are young, so it's easy to possibly remain in active economic life. Yes. So that transition, we take care of it. But should it come to the worst that you are not in a position to get income at all, that's when we can then have a conversation with you, and each case is different on what you are facing, then we chat our way out. Okay. The beauty of it's not immediate. There are usually stages that we go through between the first failure to when we say now this is way beyond. So that allows you ample time to think through the options. Because remember, this is not, we are discussing a home. This is where you are living. And we know it's among the basic needs. You are providing for food, clothes, and then we have the home. So it's a conversation we have, because as I said earlier, it's one story at a time. So we have that conversation.
Okay, that's quite interesting. I know you guys have that assurance aspect of it, in case you're not able to work anymore. Yeah. I hope mental health is also factored in there. But that notwithstanding, there's a question, Jeffrey. This is a question to you, I think. And you had mentioned earlier, but I'd like it just to revisit quickly. How are you working? It's from Dennis Minor. How are you working with cooperatives to enable members own houses? So aside from the banking world, the cooperatives world is very active in Kenya. How are you working with them to enable home ownership?
With the banks and SACCOs, we have 9 banks. Within the 9 banks, there is 1 microfinance bank. Then we have 11 SACCOs. And that was very deliberate. Okay. The reason why we took 11 SACCO more than the banks is that we understand the model that SACCOs have because they deal with their members. They facilitate a lot of investment for their members. So the connection between SACCOs and their members is closer than a bank-customer relationship. And therefore, we have 11 SACCOs that are actually enabling their members to access affordable home loans. And they are on the same playing field as these institutions that are seated here. Okay. So the 11 SACCOs are accessing funding from KMRC at the same terms as the banks. Okay. Yes.
So
and they are
do I need to Google the 11?
Actually, when you go to our website, we have the 11 SACCOs, and these are regulated SACCOs, because as one of the requirement was we work with regulated financial institutions. Yes. Either through SASRA or through CBK. Okay. Yes. So you can actually go to our website, kmrc.co.ke, and you'll be able to see the institutions that are participating with KMRC. Those are the institutions you can actually go and access funding, affordable funding from those institutions. There are 20 of them. Okay. Yes.
I know as we finish up, we've sat for 2 hours. I think majority of us, if not all of us, just want to stand up and stretch, yeah? And we're doing that shortly. This issue of rent-to-own facilities, yeah? I know you responded to that, Beatrice. In terms of this kind of arrangement that we're having, with this affordable financing from KMRC, rent yangu, keja yangu. Yeah? So most people are of that mentality. Is there a way I can get a facility and just pay as if I'm paying rent, so that I can, blindside myself and say, this is rent I'm paying, but I know it's sort of a rent to own kind of arrangement. Is it something that is an option as the table? Is it an approach that makes home ownership more palatable, and these open to all of us as we finish up? Yes.
Maybe I can take that. Rent to ownership model works best when the developer has long-term funds. So what they do, they price in an interest into the rent.
Okay.
What KMRC is offering through Rent Yangu Keja Yangu is collapsing the rental you pay to the mortgage you pay. For instance, at market rates, people who bought maybe houses worth 10 million, at market rate maybe they are paying at 150. But if it's KMRC, is maybe 90,000. Normally you'll find people paying 80 as rent. So you see, you have collapsed the mortgage from 150 to 90. Now the interest rate, the differential is about 10. So it makes sense for you to own the asset.
Okay.
But from a rent to own model, you are required to pay a deposit. Then the person who developed, and maybe these are pension funds, like what you are seeing with some pension funds in this country, then they give you that time, because then if they are making a 10% return per annum, they're able to then pay the investors this kind of money. Okay. I think this will be developed once we have developed the rates market, those investment rates market, but it's still at early stages. We believe that the commitment from the pension funds, NSSF, to contribute to affordable housing, then we can have those rent to own or tenant purchase schemes. Okay. But basically the developer has to have the money and long-term money.
All right. Louise, the earlier question, I said I really need to get in touch with Nelly. Louise, you can follow Nelly on Instagram. No. I will get you in touch, definitely. Very important. There's a question here. Affordable housing, if I contribute, is from Mary, yeah? If I contribute the 12.5% and miss the allocation, is it guaranteed that there will be a refund for those who contribute and miss? Kindly advise on how this works. So we've walked the journey, we've hit a wall somewhere. Sometimes it happens. Even the world, one of those walls in the world was COVID. You hit that wall. Is there a way I'm recouping these funds, or be told, my friend, find another keja yako na rent yako? I know this is open. I don't know who could chime in.
I believe the question is coming from the government sponsors project. Okay. Where you're supposed to put in a deposit. You're supposed to register through the Boma Yangu site. Okay. You put in a deposit of 12.5%. so that you become eligible for allocation of a house that the government is actually, the projects that you've seen the government sponsoring. There is a very elaborate mechanism under the Boma Yangu, yes. and all those regulations are actually stipulated as to the procedure on how they do the allocation, how do you qualify to be allocated a house, and then what becomes of your deposit in case you do not, because what is happening is actually a revolving fund. So if you are not allocated under project A, there is always a project B that is coming up, and then you become eligible because it was on first come basis on the qualifying, the people who are qualifying. Okay. So if you've met the deposit of 12.5%, you're already qualifying to be allocated a house. Okay. There's a very elaborate mechanism on that. That is one aspect of the affordable housing. The other aspect is the credit that we are discussing here. Yes, yes. Under this credit, any customer can actually acquire a property from any developer, either a single developer or the development that are being sponsored by the government or their own construction. Okay. Yes. So all that are coming together, collapsing into the affordable housing program.
Oh, I see that. Complementary, working with each other. Ladies and gentlemen, sometimes I start with gentlemen and ladies, but this has been quite a talk, and I think if not that one, John, that one, I'm pretty sure we've convinced more than one to say that this journey of, owning a home is possible, and you can start it as soon as possible. Start it young, more advantageous to you. All right? With that said, I'd like to thank my panelists, but even before I do that, I'd like to thank those who are participating with us on different platforms, those who've joined through Zoom, those who've joined through, Facebook that you're watching there, those who've joined through YouTube, all these platforms, we appreciate you and thank you, because I'm pretty sure you've gotten value from this conversation. Well, with that said, I'd like to thank you very much. On my immediate left, Nelly Waithaka, who is the head of banking client solutions at Stanbic Bank Kenya. We also have Joseph Kamau, the OG himself, head of property development and investment at HF Bank. Joseph, if you rebrand HF in the future, I don't want to see OG anyway that name, okay? Next to Joseph, we have Beatrice Chege, product development manager, retail mortgage at KCB. You are the tentacle people. We are reaching. We have the most branches. We appreciate you. Hopefully, you're able to take advantage of these key avenues. And next to Beatrice, we have Geoffrey Mora, head of credit at KMRC, Kenya Mortgage Refinance Company. Thank you very much, Geoffrey. And I remember rent yangu, keja yangu. That's quite a slogan right there. I don't know who helped come up with that. You should have patented that so that you make some money out of it and maybe get credit for financing, yeah? Housing. And lastly, you have John Kaburu, who's the regional manager and head of mortgage retail and business banking. That is quite a long title, yeah? But very, very important, yeah? At ABSA Kenya PLC. Gentlemen, ladies, what a conversation. Now, we are free to take some of our waters. This has been quite a chat, making home ownership possible, courtesy of KMRC and with every partner bank, Stanbic, HF Bank, KCB, ABSA Bank, all of them making this possible. This conversation doesn't stop here. Continue engaging them on their respective platforms. Get help, ask questions, because this journey to home ownership is possible. Have yourself a good morning. My name is Noah Kipkemboy. Enjoy the rest of your day. I can sip some water, right? Yeah.